Good evening. I'm Epstein, and here we are with your end of the day metal market report. And we are on now Thursday, November 30th, the end of November, by the way, 2023, and tomorrow's the end of the week. So we are now in what I call that 2-3 week window of normal trade, and then people will start peeling off, as you can imagine, for their Christmas holidays. The first week of January is often bye-bye, nobody doing much. The second week comes alive very quickly, and that's what I think will be the norm this year. Things don't really change. For the day's event, OPEC made an attempt at supporting the market. Didn't work. That's the right way to say it. Didn't work. They are asking still that for voluntary cuts. Word is voluntary. Number two, they believe they'll get them. That's where the fallacy lies. Russia has again said, well, we're a 300,000 barrel voluntary cut. We're going to go to 500,000 in January. Just the way that they always cheat. You can believe that. Okay. I do believe the Saudis will stay with their million. The African countries said, yeah, with us too. And Brazil, who's not even an OPEC member, we agree with that. We'll come on board. And that's because this year coming up, Brazil intends on joining with OPEC. So why not say it? Now, getting it done. 3 countries were giving OPEC problem. They were Nigeria, Angola, and the Congo. Immediately afterwards, 2 hours, they let the dust settle. Angola comes out. We're not in agreement with this. We are not going to cut production. It's not that they're big producers, but I'm just showing you this isn't working. What did the market do? You'll see in the financial update, it didn't believe it either. Gold, silver acting very, very good, even with the dollar up 75 points today. So what I think went on today, and it could last a day or so here, is that the dollar, it had been falling hard. It's the end of the month, end of the week. A lot of brokers get paid if they're managing money. 30-day periods, 3-month periods, who knows what their thing is. Why not grab some money? And that's what I think went on here. Also, profit-taking was the word, but not in the Dow. The Dow was on its own tear to the upside. But this is about the metals, so let's stay with them. For the gold, you're up 1.76% going into Friday's trade. That's impressive. The market is now consolidating some of the gains that it's made, but you can't get away from the fact that you were just in the 1960s and you've come up $100 an ounce. It took 2.5-3 weeks, but you did a nice job of that. The pattern is one of bullishness, higher lows and higher highs. The market, to me, as I said yesterday, I think it's got clear sailing here. I think that all the things that are working on gold, I don't see the Fed wanting to raise rates again. I see inflation sticky as can be. I see country after country with the same thing. Their banks are after them to cut rates now. Not that the bank necessarily will say they want to, but the analysts will, because they're reading what the fundamentals are, and the fundamentals are weakening. The restrictive period of high interest rates has slowed things down, but it's always that last mile that's very difficult. You can be a great sprinter in track. I never was, by the way. And you know that at the end of the race, you can just watch it. I love the Olympics. You'll see them this summer. And that's where the fade happens. Some people get that extra energy, some don't. We'll see if that's going to be the case. But what I'm looking at is I think gold realizes, no, it's going to be a road that keeps inflation, lower rates, probably a lower dollar ultimately, and that's a good news for the gold. But it got up to the Bollinger Band. You only stay over the black band 5% of the time. Now, if you don't understand how to work with Bollinger Bands, you have an opportunity with me right now. This is our Cyber Week, so I'll come back to these charts in a minute. You can get any of my free courses, my original charting course, which I don't want you to take. I want you to get the new one. Let's assume it'll be ready in January. I'm going to try for December. I'm not sure I'll make it, but I'm trying. That one. These two are great. The Enhanced Bollinger, if you buy now and you want to take that, that's the one you can choose. And the Outside Day course. These give, in my opinion, traders an edge in understanding momentum, what's the likely outcome of these patterns, what happens, and why in Bollinger Bands you get up to that number. You got to be cautious at that number. All it takes is a 1-year subscription to any of my research. It can be my full futures. It can be the morning subscriber video for futures and or for the Spider ETF or the combination of the two. In fact, any combinations. And for those of you that are already subscribers, as long as you step up in your subscription, you can't go sideways from the morning subscriber video to the ETF video because they're about the same price. You got to step up and do something else. I honor a lot. Okay, my goal is education. My goal is we'd love for you to trade through us as well. We are a brokerage firm, and our brokers know what I do, and they work with it in a great way. If you have questions, call my staff. You can move your cursor up here. And how to get to our website, just go to iraepstein.com, buy research. Any of the research products, new subscription, you're entitled. It's got to be a 1-year subscription, though. Do we understand that? Okay. So in coming back to this chart, we talked that you got up to the Bollinger Band. There was resistance, so you backed off from there, but you're embedding. Now, embedding means that you're taking the slow stochastics, and we won't count today's action. It's not going to let me do it. You can't count today, but you have to have 3 days in a row of over this number. When you do, until the red line closes back under 79, I look for the market to pop up. My slow stochastic reading won't look like yours. I modified mine. It's included in our charting software. If you're a subscriber to me and you ask what the formula is, I'll give you the formula changes, and you can work with it that way. If you're with TradingView, we have a suite of indicators where it's all built in for you already. You don't have to go through all that. Because a lot of you know that some of the services you work with, trying to get them to modify behind the scenes, the different way, the formulas, very hard. You can go in and change the amount of days. You want it of highs, lows, whatever, depending on the formula you're looking at. But get into the formula to make changes, it's hard. We do that for you in a number of ways. In the gold silver, just look at how this keeps coming down, and that tells you as this happens and the numbers drop that you need fewer ounces of silver to get an ounce of gold, which in plain English means silver is stronger than gold. And you see that on this chart. It just ran to the upside. It's not even giving on my enhanced Bollinger Band course a way to come in just yet. It will over time. You'll get a correction, but it's not there if you're not in already. In the copper market, you're now fighting a battle and have been at the 200-day average. That's this gray line with the Bollinger Band. You hit that, and you haven't gone anywhere since you did. Now, what the market is counting on is China will do something in the property sector and other parts of the economy. They've been slow to act. The market is counting that they'll force the banks to lend to make the property market get better, but they're going to have to defend that by telling the banks they're not responsible on losses. The state will be. If they don't do that, I think the bankers will fight tooth and nail. You don't fight too hard in China because you can end up suddenly you get what's called house arrest. House arrest means you're going to jail right afterwards and you're stripped of your power. So everybody's got to be careful. Please remember, China is not a democracy. It's not capitalist. It is a blend of capitalism and communism. They want everything to go great, and then when it's too good, ask Jack Ma what happens of Alibaba. They step in and you got to go in hiding and you pray you're rich enough that they leave you alone and you learn your lesson. You can't be too vocal. That's what's going on. When we take a look at platinum, I like what I'm seeing. Higher lows, higher highs in the embedded reading. So until this red line closes under 79, I think the pros are coming in and stepping into that market. And this was the first challenge, and you heard me say that, of the Bollinger Band and the 200-day average. So what did you stay under it? 48 hours? And that's what I teach traders. When you get down there, you never know that it's going to keep going down. It's an area that the pros cover shorts. And if the market embeds and gets through a reaction, which it's in right now and can stay embedded, they'll hit it again. The question is, can it stay embedded again? That's going to be the big issue this market has. So if you want to learn more ideas, click right up here. It'll take you to our research section where you can buy everything that you need for this special. The special is going to end right after the weekend. So we're at the 30th already. Tomorrow's the 1st. Come Monday, it's gone. You want to take advantage of this. It's a great vehicle that you're getting with any of these courses. By the way, you can give these courses away as a gift. You don't have to take them. Or you can buy as a gift the research and you keep the free course. I mean, there's many ways for you to play it, and you'll see that the value of the course pays for the gift. That's intentional on my part, very intentional. All right, so away you go with all that. I'm Ira Epstein. I'll catch you in the morning in my other videos that I'm about to record right now. Take care.